Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein of Linn & Associates with your metals market update for this Thursday, the 8th of February. I got my dates right yesterday. I was screwed up on some dates. And this is 2018, about 1:45 p.m. Central Standard Time. You know, I was laughing at some people that just can't get beyond themselves. I was looking at YouTube. And people are knocking me because on Fox TV I said, you know, there's a time when you pick up your chips and you walk away to the bar and you have a drink. You don't have to be in a market every day. I want you to look at the volatility in these stocks. You normally get this type of volatility not at market bottoms. You get them at tops in a market. Am I long-term bearish? How can you be? All cylinders are firing around the world for good economies. So, a correction? Yeah. I look at the metal markets. You know, the government keeps talking about inflation. Are we going to get inflation? Well, if you do, I probably have it wrong after 45 years of trading, but inflation normally goes hand in hand with metal markets coming alive. Inflation normally goes hand in hand with commodities coming alive. When that happens, we're going to have a lot to talk about. I don't know if it'll happen. I don't have a crystal ball and I look out there. But I can tell you, there's a point where you know that if you're going to try to catch every day 800-point moves in a Dow Jones, if you're bold enough to try to catch 70-point moves in an S&P, great. You're probably a novice trader. And you know that there's a time when you have to be able to control your risk. Risk is everything. And that's what I want to say. Now, I wrote a gold report, and you know because I talked about it yesterday. And I had on the screen yesterday that the first price counts, and I showed them, was at the 1309.20 area. You satisfied it today. Now the question is, does it go for the further counts to the downside, or is that enough? That's going to be one of the features that you have to consider. On the weekly chart of gold, where's the momentum? Well, the bias is up because you're over the 18-week average. But you can see price momentum's been coming down in and of itself. So you're still at that point. You're well off the high here of 1350.210, currently at 1318.40. And these aren't the settlement prices yet. When we look at a daily area chart of closes, and again, these aren't the settlement prices since I'm at 145, and I didn't even look at them because it doesn't matter to me today. It's just how the markets are doing. The only number that mattered to me today was 1309. Big time number, and in the office we have a big crew here, and I said, you've hit a major objective. Watch and see if this market can turn from it. You did, and now the question is, will it build on itself, or was it just you hit it and you're bouncing? I don't have the answer to that. What I do have an answer to is the trend is down. You still have a pattern of lower highs, lower lows. Under the current chart pattern, the last rally high was 1349.30, and until that's taken out, which is $29 away, that's a big move, the trend stays down. That doesn't mean between all this you can't get up days and down days and things changing a bit. Where's the momentum of the market? As I define it, you can see it's down, and so's the bias. Will the market reach for the 100-day average of closes? It certainly could. Getting a bounce today doesn't scream on that chart at all that, hey, you've made a bottom, but it does say a few things. Now, let me explain what I mean by that. Got an itch right there. You hit the lower Bollinger Band, and that was 1315. Your first price count was 1309. You're in a zone where the market could be at a value area. That's what you look at. Now, what about selling under a Bollinger Band? You've heard me say it before. I have never recommended selling under Bollinger Bands or buying over them. I don't recall once. Could I have in my early career? Possibly, before I knew about Bollinger Bands. But once I learned about them, and I'm going back decades, and understood them, I learned if it's 5% of the time you stay over or under them,
Why am I the guy buying over to say, yeah, this is that time where the 95% of the time isn't going to work? I don't want to be in that camp. Yeah, you can wait for better opportunity. What happens if that opportunity doesn't show? You missed it. God, I've missed everything anyway, so what's the difference? If I look at momentum as measured by the slow stochastic, which is a momentum oscillator, I'm in oversold territory. So I have a market as I'm looking at it that's giving me no reason to be a buyer. It's giving me reasons, though, to cover short positions as a trader. That's all. I'm not telling you to do that. But lower highs, lower lows, hit a price count and hit the lower Bollinger Band in an oversold condition. In the GLD ETF, lower highs, lower lows, same thing. Went down to the lower Bollinger Band. And no, I didn't run any price counts on that. But I'm really bothered that the miners aren't bouncing. And this is the GDX. It's very difficult to get a bull market without the miners joining in. So do I think we're at the bottom? Nah. Can't, the parts aren't all fitting in. Can we get bounces? Of course. Can this embed and carry the market lower? Remember what embedding is? It's when this oscillator, the slow stochastic, has both numbers under 20 for several days in a row. Well, certainly today's one of those days. Yesterday was one, not the day before. So you won't even know if it's going to embed until tomorrow. Right now, it's just terribly oversold. When I go to the gold-silver ratio, you pulled back today, and you're going to, at least at this moment, you're at 80-46. 80 is a very high number for this ratio. You got to own 80 ounces of silver, actually 80.46 at this moment, to get 1 ounce of gold. This ratio in bull markets typically isn't like that, so that's not a good sign. In the silver, you hit the lower Bollinger Band, you bounced in an oversold condition. So yes, I think pros are taking some money off the table here. What was support when you were over these key averages is now lining up as a whole band of resistance. The 18-day average, the 200 and the 100. Look at how tight they are, within 9 cents of each other. So that's a formidable number. Get over it and you'll read in the news or your technical paper, well, the market's cleared key moving averages. But until it's cleared it, it hasn't. So there's plenty of resistance here in an oversold market that is downtrending. In the copper market, you extended the second day in a row under the lower Bollinger Band. Also, the 100-day average is not acting as support like it did back here in some of these areas here. Now remember, you did slide under it over here. You can almost see that, and it came back. We could get that. If the world's talking of inflation and if everything's going good, copper is one of the what we call the doctor metals. It often is a barometer of how the world is doing. It's not doing well if this market stays down. That's basically what it's saying. Nor is silver staying up, nor is platinum staying up, nor is palladium. So while we're seeing good economic data, we're seeing that the market is scared about inflation. The inflationary metals are not in that story. The dollar index, well, stalling. That's all that you can say. It's had a nice run. Will it be able to get up to the upper Bollinger Band at 90.75 before it pulls back and challenges its support at 89.56? That'll be interesting. Do I think the pros will buy the market there? I don't. I think their risk is too big. I think if they bought it and they put a stop under this low, they got $1,000 worth of risk. In addition, they have an overbought condition. There's certainly there's no reason to be short, but I can give you plenty of reasons that I don't think they're going to be long right here. Now, take the stock market down in the second part of the day, you probably get a further bid in the metals as you start scaring people. What else? Keep your eye on bonds and notes in a market like this, because as the stock market falls, people move into those havens. Another haven, you know what I'm going to say, the Japanese yen. That's one. British pound today up because the Bank of England, talking about as early as May, going to raise interest rates. They were going to be on the sidelines, but they have inflationary stories, they're saying. We'll see what that does. Want to remind you about my gold report because I think you want to see it. Admittedly, I didn't put the seasonal charts in. I did put in the price count, the weekly, the daily, and I gave you a pretty good scenario. If you haven't received it, you want to give my staff a call. They'll get it right out to you in 1 second. They'll email it to you. 866-973-2077. You can go to our website, sign up for it. You can put it right up here if you'd like. If you'll see me on YouTube, click on that icon. And underneath us on many websites says, click here for Ira's free information. I'm Ira Epstein. Thanks for watching. Let's see what the day holds, and I'll see you in the morning. Take care.